Hello curious guys! Welcome to my channel Want to Know About GST. In today's video, we're going to start with Introduction to GST Part 1. Before moving further, let's have a look on content of this video. So first, we're going to start with the meaning of tax, after that types of tax, then Introduction to GST, then features of GST in India, after that reasons for introduction of GST in India, then components of GST, after that the concept of input tax credit, then the manner of utilization of input tax credit, and finally eligibility and registration for GST. So now let's move further and start with the meaning of tax. So as you all know that tax is a compulsory payment made by the SSE to the government for the welfare of the society. For understanding this, let's take three characters. The first one is SSE, the second one is government, and the third one is society. So as you can see that SSE will pay tax to the government and government will utilize the tax money for the welfare of the society. Moving further with the types of tax. So there are two types of tax. The first one is direct tax and the second one is indirect tax. Now, direct tax is studied as per the Income Tax Act 1961. And in indirect tax, the major taxes for the time being are custom duty and GST, which is the main part of this video. So in GST, there are two components. The first one is intrastate GST and the second one is interstate GST. Now, intrastate GST is being levied when there is supply of goods and services or both within the same state or within same union territory, and interstate GST is being levied when there is supply of goods and services or both between two different states or two different union territories, or also when there is supply of goods and services or both between a state and a union territory. Now let's move further with the components of intrastate GST. So there are three components. The first one is central goods and service tax, the second one is union territory goods and service tax, and the third one is state goods and service tax. In interstate GST, there is only one component, that is integrated goods and service tax. A detailed discussion on these components will be done in the further part of this video. Now moving further to this animation which shows a conversation between two friends. Dude, what is the concept of GST, bro? I don't know, bro. Let's gain some knowledge on it. Why not? So now let's move on to the main part of this video, that is Introduction to GST. So GST is an indirect tax levied in India on the supply of goods and services. Guys, can you notice one thing here, that the term used is supply rather than sale, which was then the previous indirect taxation law. This means that whenever there is supply of goods and services, GST will be levied on it. Then GST is levied at every step in the production process, but is refunded to all the parties in the chain of production other than the final consumer. Means the final consumer have to bear the whole burden of GST, which is the basic rule of indirect taxation. Then it came into effect on 1st July 2017 through the implementation of 101 Amendment of the Constitution of India by the Indian government. Then it is an indirect tax which has submerged many of the indirect taxes in India, like excise, VAT, many local taxes and cesses, and many more. Now, let's start with the features of GST in India. So basically, GST is comprehensive in nature. Now, comprehensive generally means all in one. So as you all know that it has submerged many of the indirect taxes in India. Now, it is one indirect tax for the whole nation. The second feature is it is multi-stage in nature. Now, as an item moves through its supply chain, that is from the manufacturing stage to the final sale to the consumer, it has to move from many hands. And in each such stage, GST will be levied. For example, at the time of buying of raw materials, at the time of manufacture, also when there is sale to wholesaler or retailer, and also when there is final sale to the consumer, which makes it a multi-stage tax. Now GST is also a value addition tax. This means that GST will be levied only on the value addition, that is the monetary value addition made to the item, rather than on the price of the whole item, making it a comprehensive form of VAT. Further, we move on to the need for introduction of GST in India. So as you all guys know that our previous indirect taxation law was full of flaws and drawbacks, due to which both the indirect taxation department and SSC were in trouble most of the times. So finally GST was introduced in India in order to remove such major drawbacks of our previous indirect taxation law. Now let's have some look on the major drawbacks of our previous indirect taxation law. So first is non-inclusion of several local taxes such as luxury tax, entertainment tax, etc. Then no sandbit after manufacturing stage. Then non-integration of VAT and service tax. Then double taxation of a transaction as both goods and service, which was the case in hotel. Then the final one is cascading of taxes, that is levy of tax on tax. Due to such major drawbacks, our government decided to merge all the indirect taxes into one comprehensive indirect taxation system in the form of goods and service tax, whereby GST paid on purchase can be allowed as input credit for GST payable on sales, resulting in free flow of goods and services in India. Then we move on to the components of GST. As we had earlier discussed, there were 4 components, that is central goods and service tax, then state goods and service tax, then union territory goods and service tax, and then integrated goods and service tax. So now let's first start with the central goods and service tax. So GST levied by the central government on intra-state supply of goods and services or both would be called as central CGST, and obviously it would be collected by the central government. Then we move on to the state goods and service tax. GST levied by the state on intra-state supply of goods or services or both would be called as state GST. So guys, can you notice one thing here, that whenever there is intra-state supply, both state GST and central GST will be levied. Now state GST is also defined to include a union territory with state legislature, means the union territories who have their own elected legislative assemblies. In India, Delhi and Pondicherry are the union territories with state legislature. Thus, on every supply of goods or services or both within the union territory with state legislature like Delhi and Pondicherry, state goods and service tax will be levied rather than the central goods and service tax, and it will be also collected by the state government rather than the central government, which is done in normal cases in other union territories. Now, we further move on to union territory goods and service tax. So GST levied by the union territory on every intra-union territory supply of goods or services or both would be called as union territory GST. In India, there are 7 union territories like Chandigarh, Dadra and Nagar Haveli, Diu and Daman, Lakshadweep, Andaman and Nicobar Islands, Delhi and Pondicherry, out of which Delhi and Pondicherry are the union territory with state legislature. Means here SGST will be applicable rather than CGST. Further moving on to integrated goods and service tax. So, GST levied by the central government on every interstate supply of goods or services or both would be called as integrated GST. Now, IGST collected by the central government would be apportioned between the central and the state government in the manner as may be prescribed by the GST Council. For the time being, it is 1:1. Now, a further discussion on it will be done in my upcoming video, that is Introduction to GST Part 2. Now, further, we move on to the concept of input tax credit. Now, input tax credit under GST means a credit which a supplier gets when he purchases some goods for further sale. Now, when a supplier sells some goods, he has to pay output tax, and for paying off such tax, he can utilize the input tax credit which he had got on the purchase of goods. So, such system of input tax credit helps to levy GST only on the monetary value addition made to the item, avoiding double taxation, which is the very good part of input tax credit. Now let's take an example. Suppose Mr. A purchased goods worth rupees 1000 at the rate 18% GST from Mr. Z. So the amount of GST would be rupees 180. So now Mr. A has rupees 180 as input tax credit with him. Further, such goods were sold by Mr. A to Mr. B at a selling price of rupees 1500 at the rate 18% GST. So GST to be paid by Mr. A would be 270, which is 18% of rupees 1500. So now Mr. A has to pay rupees 270 as GST. So GST will be paid in this manner, that is input tax credit of rupees 180 and the balance in cash. So the golden rule for paying of GST is first utilize the input tax credit which you had got on the purchase of goods, and then for the balance payment use cash. Now let's move on to the manner of utilization of input tax credit, which is also an important concept. Now we move on to state goods and service tax and union territory goods and service tax. So the input tax credit under GST of SGST or UTGST shall be first utilized towards the payment of output SGST or UTGST respectively. Then it can be utilized towards the payment of output integrated goods and service tax. From this, we can conclude that input tax credit of SGST or UTGST cannot be used for the payment of output central goods and service tax. Now we move on to central goods and service tax. So the input tax credit under GST of CGST shall be first utilized towards the payment of output central goods and service tax. Then it can be utilized towards the payment of output integrated goods and service tax. So this leads to conclusion that input tax credit of CGST cannot be used for the payment of output SGST or UTGST. Can you notice one thing here, that both of their input tax credit cannot be utilized for payment of each other output tax. That is, input tax credit of SGST or UTGST cannot be used for the payment of output CGST, and input tax credit of CGST cannot be used for the payment of output SGST or UTGST. Now we further move on to integrated goods and service tax. So the input tax credit under GST of IGST shall be first utilized towards the payment of output integrated goods and service tax as assumed, then towards the payment of output central goods and service tax, and then finally it can be used towards the payment of state goods and service tax. So the input tax credit of integrated goods and service tax should be used only in this hierarchy. Further, moving on to the registration and eligibility for GST, which is the final topic of this video. So the eligibility for registration in GST basically depends upon the turnover. A business whose aggregate turnover in a financial year exceeds ₹20 lakh has to mandatorily register under GST. And this limit is set to ₹10 lakhs for northeastern and hilly states flagged as special category states, which are as follows: Arunachal Pradesh, Assam, Jammu and Kashmir, Manipur, then Meghalaya, Mizoram, Nagaland, Sikkim, and then Tripura, Himachal Pradesh and Uttarakhand. So for this state, the limit is set to ₹10 lakhs. Further, small taxpayers may either be exempted from GST or can opt for composition scheme. Now government has introduced the composition scheme in order to help ease the implementation and tax compliance process for the small taxpayers. Further, medium and large taxpayers will have to register themselves under GST and have to file all GST returns on monthly basis, that is 3 standard returns per month, which is for the time being. So GSTR 1 for sales, GSTR 2 for purchases, and GSTR 3 is a combination of GSTR 1 and GSTR 2. And after that, all these returns are filed at the end of the financial year. One annual return is to be filed, that is before 31st December of the next financial year, which is combination of all these GSTR forms filled during the year. Now let's have a look at this chart, where there is an SSE whose turnover is above 50 lakhs rupees. So he is a normal taxpayer and have to file all GST returns. Now if his turnover is below 50 lakhs, then he can opt for composition scheme if he wishes. And if his turnover is below 20 lakh rupees, then he will be exempted from GST. So this was the concept of registration and eligibility for GST. Now thank you guys for watching this video, and in next video we will continue with Introduction to GST Part 2. And if you have liked this video, then please do hit the like button and also subscribe my channel, and also click the bell icon in order to get all the notifications about my latest video updates. And please do like, share and comment on this video, and please share this video to all your friends, family, relatives. Thank you.